Todd Halleck here. Thought we would take a little time today to talk about gifting. It's always on everybody's mind this time of year as the year is quickly drawing to a close. And so it's important to understand what the tax consequences are of the gifts that you may be giving. And so today I want to spend a little time on the difference between annual exclusion gifting and lifetime exemption gifting. So for tax purposes, each of us has an annual exclusion from gifting that's equal to $15,000 per person per year. So a husband and wife could give away up to $30,000 per year. So if you as a husband and wife have a son and a spouse, for example, you could each give that son $30,000 and you could each give that spouse another $30,000, equaling a total of $60,000 in a gift. And as long as you stay below that $15,000 per person per year threshold, you can give away as much as you want. You could give away every dollar that, for example, Warren Buffett has without tax consequence, as long as you never exceed $15,000 to any single person during any single year. There's some exceptions to that for certain things. For example, you can pay tuition directly to a school for a person, and that won't count against your $15,000 amount. You could pay a medical bill directly to a provider, and that won't count against the $15,000 per year amount. But generally, we're limited to $15,000 per person per year in annual exclusion gifting, and those are the gifts that don't count for tax purposes. Now, gifting of cash may be an easy thing to know how much $15,000 is worth, right? A dollar equals a dollar, and so you know exactly how much you're going to give. If, for example, you're giving away stock in a publicly traded company, again, you know how much that company is worth by looking at what the price that company is selling for on the day that you do the gift. If you get into gifting other assets that are a little harder to value, this $15,000 per person per year can start to get tricky. If you're giving away a fractional interest in real estate or a fractional interest in a company, for example, then that $15,000 per person can be a little bit harder to ascertain exactly how much you're giving away. But again, as long as you stay below that $15,000 per person in a year, you're okay from a gift tax standpoint. Now also remember, that's an aggregate of all the gifts you've given in a year. So if you've given $5,000 in January and another $5,000 in July, and then you want to give $6,000 in December, well, you've now gone $1,000 above your annual exclusion amount, and then you're starting to dip into this next one, which is your lifetime gift exemption. Presently, each of us has $11.58 million in lifetime gift tax exemption. This is actually scheduled to increase under current law to $11.7 million next year in 2021. But right now for 2020, it's $11.58 million. So any gift that exceeds the $15,000 in a given year will start to dip into your lifetime exemption and will begin to lower that exemption going forward. So if you go over your $15,000 by say $100,000, now you only have 48 million left of lifetime gift tax exemption. What the gift tax exemption is, it's like a coupon. It lets you go above. You keep using your coupon and you don't actually have to pay any taxes. Once you've exceeded this amount, the lifetime exemption, that's when you're going to start paying tax on your gift. And that gift tax rate is currently at 40%. So these things work together. As long as you're below this number, we don't have a tax issue, and we don't even necessarily need to file a gift tax return. If we start dipping into this, we need to file a gift tax return, and you start using your exemption amount. The other thing to know about this amount is as you use some of your lifetime gift exemption, your estate tax exemption at death is also reducing as well. So this amount, whatever this amount is, always is equal to what you have left of your estate tax exemption as well for when you pass away. Thing to be mindful of here is tax reform is on the docket, and this may be changing. This number may be changing, so we want to keep an eye on it. The other thing to understand is even under the current law, this number is scheduled to go down if it's not extended or made permanent by the end of December in 2025. So these numbers will change from time to time, and so as you're wanting to get into these gifting issues and avoid tax consequences, it's important to understand what the consequences are. Now again, these gifts apply to gifts to individuals, not to charities. If you're going to give a gift to charity, that's not going to be limited by either of these amounts, and it's not going to reduce either of these amounts. So that's some Gifting 101. We hope you have a happy holiday season and a really prosperous new year. 2020 has been a bit of a bounder, but I think 2021 is going to be great. And so as you're getting ready for year-end stuff, if you're thinking about gifting, keep in mind these limitations and don't get yourself into hot water inadvertently. Hope you've enjoyed this video. Please like and subscribe to our videos here below, and we look forward to seeing you again.